On day one, the first US spot XRP ETF didn't just launch, it detonated. But while the ETF broke records, the token itself slipped, leaving everyone asking the same question. How does one of the biggest moments in XRP history start with a price drop? Before we break it all down, make sure you hit subscribe to Crypto News so you never miss the stories the mainstream financial media can't explain. The launch that shattered expectations. The moment markets opened, the new XRP ETF, ticker XRPC from Canary Capital, immediately lit up the board. Analysts were expecting a decent launch, maybe a few million in early trading, but the numbers came in like a shockwave. Within the first 30 minutes, volume had already crossed $26 million. By the end of the day, it blasted all the way up to $58 million, making it the biggest ETF debut of 2025, beating out hundreds of competing funds. But here's where things get even more interesting. What the public saw on the charts, $58 million, wasn't the full picture. Behind the scenes, institutional inflows hit nearly $245 million in-kind creations. That means big players weren't just trading shares, they were supplying XRP directly to the fund, locking in long-term positions instead of flipping them. That alone should have pushed the token upward, but something strange was happening in the background, and the market reaction didn't match the hype. The price drop nobody expected. You'd think a record-breaking ETF debut would skyrocket the token. Instead, XRP slid anywhere from 2% to 8% depending on the exchange. A weird contrast, huge institutional interest, but retail markets dragging the price down. This is classic sell the news behavior, the same thing we've seen with nearly every major crypto milestone. When a big event is coming, traders buy the rumor, hold the anticipation, then unload the moment the event happens, even if the event is overwhelmingly positive. XRP had been climbing for weeks ahead of the launch, pushing right above its 365-day moving average. The momentum going in was massive, which usually signals a short-term correction once the hype hits its peak. But still, should the token really have dropped on a historic day like this? To answer that, we need to dig deeper. Why record ETF numbers didn't boost the token? ETF flows and token prices don't always move in sync, and this launch exposed that disconnect perfectly. Institutional inflows, those $245 million worth of XRP, don't always hit the open market the way retail buying does. These are pre-arranged creations, wholesale transactions, and partner agreements. They don't leave the same footprint as tens of thousands of retail buyers rushing to exchanges.
Meanwhile, the token itself trades in a completely different ecosystem. Retail sentiment, leveraged traders, altcoin market weakness, and macro fear all hit XRP at once. Even while institutions were locking XRP inside the ETF, retail traders were taking profits or waiting on the sidelines. And here's a factor people often forget. ETF volume doesn't automatically translate into spot demand. Shares can be bought without necessarily creating new XRP demand unless creations are triggered. This explains it. The ETF had its explosive debut, but the token wasn't ready to reflect that excitement. Still, that doesn't mean the launch wasn't a major turning point. What this launch really means for XRP. Even with the price dip, the first US spot XRP ETF marks a massive shift for the asset. For years, XRP's biggest controversy was regulatory uncertainty. Whether you agree with the SEC's stance or not, one thing is clear. Approval of a spot XRP ETF is institutional validation. It signals that regulators are comfortable enough with XRP's structure, liquidity, and custody processes to allow a fully regulated fund tied to it. That alone changes the way banks, wealth managers, and investment firms view the token. Already, analysts are predicting that if more ETFs join or if XRPC continues attracting inflows, XRP could see $4 to $8 billion in institutional capital over the next phases. If even a portion of those inflows convert to actual token demand, either via creations or hedging, the long-term price impact could be enormous. And compared to other altcoin UTFs, XRPC's launch outperformed several major names that debuted earlier this year, including some high-hype competitors. That's not just impressive, it's a signal. But to understand where XRP goes from here, we need to address the risks that could shape XRP's next move. Even with a successful ETF debut, XRP isn't immune to broader market dangers. For one, altcoins move in cycles, and we're in a phase where volatility spikes quickly. If Bitcoin begins pulling liquidity or if the market enters a short-term risk-off period, XRP may feel the pressure regardless of ETF inflows. Liquidity mismatches are another silent risk. ETFs buy in bulk, but spot markets can sometimes lag behind in reaction. That delay can cause sudden surges or unexpected dips depending on how creations and redemptions play out. Then there's the regulatory layer. Despite the ETF approval, classification debates and jurisdiction questions continue behind the scenes. Nothing is guaranteed in the long run, and one headline can shift sentiment overnight. But even with those risks, the roadmap for XRP looks clearer than ever, and the next phase could be even bigger. What happens next? This is where it gets interesting. The next few weeks will reveal everything. The biggest signals to watch are daily inflow numbers. If XRPC keeps attracting tens of millions per day, that movement will eventually bleed into price support.
2. More ETF approvals. If competitors launch their own XRP products, the ecosystem grows and demand multiplies. 3. Breakouts in the token price. Right now, XRP trades around the mid-$2 range, testing support around $2.30. Resistance sits near $2.50. A clean break above that could trigger a rally toward analyst targets hovering around the $5 zone. 4. Ripple's institutional partnerships. If major banks begin using ETF structures to hedge or gain exposure, the domino effect could kick in. This launch wasn't the final destination, it was the door opening, and the real moves might start happening in the days, not months, ahead. If you want to stay ahead of every shift, make sure to subscribe to Crypto News because we track each catalyst the moment it hits. The real story of XRP ETF Day 1. The first spot XRP ETF didn't behave like the crypto world expected. The ETF exploded, the token dipped, and analysts were left scrambling for answers. But when you zoom out, the picture becomes clear. Institutional demand for XRP is real, it's strong, and it's finally stepping into regulated markets. Day 1 wasn't the end of the story, it was the beginning of a much bigger one. If this breakdown helped you understand the chaos behind the charts, hit like, subscribe to Crypto News, and ring the bell so you never miss the next update.